this month, something interesting happened in the stock market in Kenya, specifically the Nairobi Securities Exchange.
Why? Because of a new feature on M-Pesa called Ziidi Trader.
Ziidi Trader.
Ziidi Trader.
And the number of daily trades practically quadrupled in a day, from around 7,000 to around 26,000 trades in one particular day. Is this Ziidi effect like a genuine revolution that will create a new generation of Kenyan capitalists? Or is it like a Trojan horse, a carefully constructed ruse designed to benefit its creators more than really the users?
Hey guys, before we continue, we've realized that 84% of you are not subscribed. So please help us out.
We will go a long way to helping this channel get known a lot more.
Our goal is to reach 100,000 subscribers in this quarter. Stop laughing. And each and every subscription takes us there. Thank you. Welcome to the Admin Access Podcast. Today we're talking nothing but stonks. I know some of you in the comments said that you don't want the memes. And I'm so sorry.
You are wrong.
Because
according to the Gospel of Evans, you are wrong.
Anyway, so there's this funny image that as we're doing research for today's topic that had to do with stocks, and there was a periodic table of assets. And I mean, it's a bit wild in regards to the many things. I'm just going to put it up here on the screen.
Just pause the screen, take a screenshot.
Yeah. What I found most interesting.
I don't believe in this table though. Putting crypto as a risky asset class, I don't relate to that,
Yeah, you've spoken like a true crypto bro.
But racehorses, come on, bro.
Racehorse is a legitimate investment.
It is a legitimate investment. In fact, I don't put racehorses above art. But anyway.
Above fine art.
I mean, at least you can see the animal. It's tangible. You can see it. Anyway.
I also find it interesting that they put wheat and corn as an investment class on its own.
But when you think about it, it's a raw material to so many things, man.
Yeah, but what isn't a raw material?
Fair enough. Anyway, guys, welcome to the show. Welcome to the show.
We have a great story. Number of stories?
Just a story.
Just one, actually.
But early this month, something interesting happened in the stock market in Kenya. And specifically, the Nairobi Securities Exchange. And the number of daily trades practically quadrupled in a day, from around 7,000 to around 26,000 trades in one particular day. This is now a daily transaction.
And in theory, 40 million Kenyans now have direct access to the stock Nairobi Stock Exchange in particular. Yeah. And this got us really thinking about...
but it's because of one reason. Ziidi Trader, which is Safaricom's new foray of, democratizing access to the stock market for over 40 million M-Pesa users in the country. So the headlines are very clear, man. Like democratizing the market, a revolution for the retail investor. And I mean, it's a classic story of technology disruption. And
someone described innovation as you take what is accessible to the rich and make it accessible to the market at a price that they can bear.
Exactly. And I think what we wanted to address, especially with this episode, is like a critical question, right? Like, is this Ziidi effect like a genuine revolution that will create a new generation of Kenyan capitalists? Or is it like a Trojan horse, a carefully constructed ruse designed to benefit its creators more than really the users? So is it really a bust? Is it a bubble?
Is it hot air, or is there truly something behind?
Is there going to be a real bull run?
Yeah.
Anyway, so we'll unpack this in a couple of ways today. So one, I was thinking we need to start by painting a picture of the graveyard that was Kenyan retail investment to this day. I think the NSE, I don't know, it's been in establishment since 2004, 2006, one of the two. For 2 decades plus.
Yeah. Secondly, we'll look at the Ziidi and whether it is flawed by nature or if it is truly
what's
right
good
conduit.
about it, what's bad about it, what's ugly about it.
Yes.
And finally, I think we'll want to also benchmark it and compare it against like global playbooks, like what lessons can Kenya learn from comparatives like in the US, with Robinhood, and maybe like in India with Zerodha, So it's going to be quite
Sprinkle
interesting.
in a bit of Kalshi,
poly
market there.
You know, us DJs.
And you have a recipe for a good show.
Wag me. We're all going to make it. Anyway,
So, Dom, maybe you can start us off by, let's look into the graveyard before Kenya's retail investment desert. And what I mean by that is, let's look at why.
What's the context here?
What's the context behind this? I mean, stock trading isn't anything that is necessarily new. Yeah. It's one of the oldest industries. If I'm not wrong, as I was reading about it, I learned that stock trading primarily started in Netherlands, if I'm not wrong, because Dutch merchants could not afford to YOLO all their capital into the ships.
I love you know you're using a lot of crypto terms today.
Anyway, so the idea that you'd have your own enterprise and start giving out pieces of it to the public so that they can take part in what you're doing started off as a way of managing risk. Yes. In the sense that, hey, I have my merchant ships. They're going on this very risky expedition. I cannot afford to just risk all my money into this investment. But there is potential for an upside. Yeah. So I hedge my risks by opening it up to those around me. Of course, when you started, it wasn't necessarily a market. Yeah. You in the same way you let your friends and family join in, or your close business associates to take part in it. And then over time it grew. And actually it has grown beyond just being something that you hedge your risk. Actually now, especially in the most mature and advanced markets, for example in the US, it's about the upside. There's a bit of both. Yeah, the example, the dividend stocks, you know, those who buy something because they believe this thing is going to give them a great return. Value. But a lot of the driving force behind it, in fact, when you look at the bigger stocks, a lot of it is driven by the perception of, hey, the value of this piece of this company is going to be worth so much more, especially as I look at the investment and the strategy that they're employing. Yeah. So now the question is, now to bring it into the Kenyan context, what's the context for the Kenyan Stock Exchange? Yeah, and
I think you kind of put it out quite well. And I think to kind of understand the hype around Ziidi, it's important to actually appreciate the way the retail investing landscape before was quite barren, to actually be honest. It wasn't just sleeping. It was, I mean, for the average person, it was immensely difficult to participate in purchasing equity and purchasing shares of different organizations. So you couldn't just wake up one day and you decide that you want to buy shares. You had to navigate like a very, a maze of paperwork. Yeah. You had to open a CDS account, a central depository system account. You needed to find and register with a stockbroker. You need to deal with a lot of high minimum investment amounts. And then also, you need to also stomach a lot of transaction fees, especially when you're if you wanted to do small investments, it kind of just made it very impractical. And so the result of that was the market now became just a market for the elite, people who could actually afford to pay to play. And the numbers were really staggering when you think about it. Just to kind of dig into a little bit of the statistics in place, before Ziidi, Kenya had around 1.54 million registered CDS accounts in a country of around 55 million people. That translates to around 3% of people participating. But it gets even worse. 97% of those registered were actually inactive and dormant. In fact, some reports cite that it's only around 61,000 people who are actually actively trading in the stock market. And there's a lot of innuendos as to why that became the context. One of the interesting things that I found in my reading was around 2006 to 2008, in Kenya, there was like an IPO boom. A lot of the companies were getting fresh and being freshly listed. In fact, a big one was Safaricom, which right now is almost like half the market cap of NAC. Which is kind of
I remember at that time, being in primary school, I didn't know anything about stock exchange, but there were two companies that I'll never forget, that Safaricom and KPLC.
Yes, Safaricom, KPLC.
Where it was that's what I could hear the adults around me talk about, how people buying shares.
Yes, and it was crazy. People took loans. In fact, before IPO, I think the Safaricom IPO, it was almost 669% oversubscribed, which means that a lot of the bid price that people were getting into, I think they were only able to like at least get around 21% of that. And because of that, like people took like 5 years, because I think Safaricom IPO'd at around 2.2 shillings, give or take, per share. And that means that the guys who invested then like took around 5 years to break even on the investment. So imagine you took in like, loans to participate in this IPO boom. Oh, there's a lot of like government
of the largest company.
Speaking of,
and most profitable.
It's actually been, let's say it's been around 10 decades since there was a large IPO in Kenya as well. And right now, with the timing of Ziidi, there's a big IPO coming out. As of the time of this recording, it's actually in 2 days. I actually didn't. I also YOLO'd a little bit. But that's a story for another day.
One thing they can never accuse us at Admin Access
is
not standing on our own beliefs.
Not putting our money where
our mouth is. We put Dominic's money where our mouth is.
But anyway, the thing is, you can imagine the whiplash. So when you see the statistics saying that 97% of registered CDS accounts are actually inactive, they're dormant, it's because of that whiplash that people got, that craze for people participating into, like we're all becoming capitalists and things like that. However, it's important to also kind of have it in context with how our stock market compares globally.
Yes.
So let's put some global context here. In the US, around 45 to 62% of the population participates in the stock market. And this is through things like commission-free platforms like Robinhood. They have these plans like 401ks and better retirement plans, really just a more mature market. In India, around 8%. But remember, India is almost like 1 billion people. That's around 112 million people investing and participating in the stock market. And when you think about it, it's also because of those global comparatives that we'll talk about, like Zerodha and these main institutional and structural things around payments like UPI that's in the market. In Japan, it's around 13%. But in Kenya, when you just consider the active ones, we're looking at around 0.4% of the population participating. So yeah, this lack of participation had a lot of real consequences, right?
Yeah, and you also have to put in context the fact that both the participation in the Kenyan market was a split between local and foreign investment.
Yes.
Of which foreign investment has been seeing a drop since, is it like 2014 or so?
Yes.
And so even with this move of opening it up for retail investment comes from a backdrop of, hey, it's not only just that there's a small participation locally, but even of that participation, there is a drop from those who are not local getting out of the market.
Correct. And which actually brings me to like one of the first hot takes I had. But before I get into that, just before, like, because of this lack of participation, it really largely made the market very illiquid. And because of that, now it's dominated by one large player. As I said, Safaricom is like roughly half of the NSE's market cap. Retail investors, as you rightly put it, like contributed around 15% of trading volume, with the rest being foreign institutions, the way you put it. And also not having a major IPO for like a decade till like 2025 also made it like a very, technically a stagnant pond. So when you talk about the bar for revolutionizing the Kenyan capital markets, my argument is that it was incredibly low, just to begin with. And the situation was so dire that almost any change that lowered barriers to entry, no matter how flawed, was guaranteed to be like a seismic shift. So, in essence, Ziidi didn't even need to be perfect. It doesn't even need to be perfect.
Just needed to exist.
It just needed to exist. So,
I think that's a good segue into our next part on the product itself and whether it's the right conduit. Is it bound to succeed? Is it really the big innovation that it's set out to be?
Yeah.
But I think there's something that we need to kind of address in the sense that technology is a conduit for change. But it also works in a good cultural context. Yeah. As you mentioned the participation rates in different markets and just how I think in the US it's the largest in regards to the stock. I think they say about, is it like 15% of households?
Yes.
One or the other are invested.
45 to 62 depending on the year.
That's a very stark difference between almost any other country that you'd look at, including our own. Yeah. And I think it also speaks to the fact that, hey, there has to be a cultural change towards how we view savings, how we view investment, how we view stocks. And
Agreed.
perhaps now technology tends to be a good conduit for changing, creating cultural changes. Like in the same way that, hey, if you think of something like Uber, the idea that, hey, the gig economy is a cultural shift where people looking at employment as being now, hey, this is not the only path towards making money.
Yeah.
Technology tends to move and to change cultural norms or cultural beliefs. So do we think that Ziidi has the power? One, it has the backing of the largest organization in Kenya. It has the distribution required, which for all who watch our show know that distribution is king. But does it have enough innovation or enough pull to create the cultural shift?
Now, to be honest, that is the only good thing about Ziidi in my analysis that is there. However, and as we'll get into it, it has some very deep flaws. I wish for it to only be the first, but not the only. There are some very deep structural issues that make it really, really flawed. And when we now start comparing it with other global comparatives, you'll actually see. So let's talk about it, because you've kind of segued me really well actually into it. So Ziidi arrives, right? And suddenly daily trades quadruple. And then on launch day, over half of all trades on the NSE were actually conducted through Ziidi. Now, there's this democratization story that Safaricom, that the papers are selling. But when you start looking under the hood, there's some serious questions begin to emerge. So let's start with ownership. What happens when you buy a share on Ziidi? Do you actually own it, right? And not quite. That is not the case in the traditional sense of the word. And it's probably one of the most misunderstood aspects about Ziidi, because all the shares that you buy on Ziidi Trader, they're actually held in a single pooled account, which is managed by an exclusive broker. That's Kestrel Capital. So basically, your ownership is basically just an entry in Safaricom, or in this case, Kestrel's like internal ledger. You don't get a personal CDS account. This means you also likely do not have direct voting rights at the company's AGMs, which is basically one of the rights that people get when you
get as a shareholder.
And so your legal protections could also be a bit different if the broker were to face insolvency. And that is a very big
You don't have legal protection?
No. It could be limited if this particular broker had like insolvency issues. You have like a single point of failure gaping hole looking at you by approaching the one exclusive broker model, which right now is only Kestrel Capital. So all Ziidi trades are managed by an omnibus account that are being handled by this particular broker.
So let me ask, for the average person, you've heard about this announcement.
Yes.
You've downloaded the app.
Yeah.
Okay, you already had the app. Let's just be honest. You're opting in. Is this something that you should care for, barring any insolvency issue? Like, is it truly something that people should care enough about, whether I truly own, if I own the stock with regards to the actual company shares, or hey, it's a fractional ownership through the broker.
Proxies or whatever. Yeah. To be honest, it is true. Many people, I think it's the...
Does it really matter?
It's a nuanced question in terms of it depends. To many people, especially retail investors, I don't think that matters. But it's important to understand that distinction, right? Because Ziidi isn't democratizing share ownership. It is democratizing share exposure, right?
Yeah, or investment
exposure. Yeah. You're not becoming a part owner of the company in the traditional sense, really. You're making a bet on price movements. And then it's facilitated by Safaricom and Kestrel. And I think that's a very crucial distinction. And not to really shoot down on the access gains that we're getting, but it's important to kind of keep that in mind. Another big argument that people also really have is like the cost. Ziidi has made things much cheaper. It's made it more accessible for retail investors. And so I wanted to also kind of dig a little bit in on the economics and the dynamics of, especially let me call it retail investment through Ziidi.
Yeah.
So the narrative is that it's cheaper. Traditional brokers typically used to charge like between 1.8 to I think 2.5% per trade. And Ziidi apparently charges around 1.5%. So is it cheaper? Yes. But is it cheap? Now, globally, all around the world, the revolution right now is about zero commission trading. In fact, it's been attacked in different ways. Robinhood in the US has, it's a very controversial model, but this payment for order flow model facilitates zero commissions in trades, to place trades. Zerodha as well in India. So 1.5% against what I think when you know, like in India, they have this thing for intraday trading, which charges you, I think it's around 20 rupees. But in essence, it's effectively the cost comes to around 6 bips. When you compare 0.06% to 1.5%, there is still a big bath of innovation that can be done.
Does that create a cap on the volume that one needs to move or to trade in for that to be? Okay.
Let me explain the implications of that. So let's imagine, right now, first of all, there's like a minimum lot for many of these shares. Imagine a share is trading for like 1 shilling, right? And you need 100 to place a trade. So you essentially invested 100 bob, right? 100 shillings. But it costs you 1.5 to put the trade, and then costs you another 1.5 during settlement. That's 3%. Essentially, for you to break even, you need the price movement of that stock to move at least 3%. Average yields on the NSE, we're looking at around, even the good gainers are like somewhere around 7% per annum. So factor in inflation. So is this really like a proper investment path, stock path?
And you're also not getting actual investment.
And you're also not getting like proper real value. Or is it just basically a good price discovery tool for like a lot of the big traders who are actually there and putting in the real money, like we're talking about now? On average, retail traders, I think it was reported in one of the papers, and we can attach it here in the show notes, Kenyans are investing around 3,400 per share.
Cash shillings.
Yeah, but normal stockbrokers on average invest around 122,000. That's around a 35x increase. Difference in just like the investment load that people are putting in. The economics of somebody investing 100 shillings to require like a large price movement is very different from somebody who's doing 122,000 shillings on average per bet, per stock bet that they're making, right? So that's something important. So it's actually very costly for retail. These costs really rack up. Now, add in a factor of things like intraday trades, I'm sure there's probably going to be layered spreads and hidden fees here and there, or maybe not hidden fees. We should probably confirm it on the pricing schedule, but effectively it's very costly for microtransactions to happen. But hey, we're democratizing.
Yeah, but then access. As well, you have to look at it from the point of view of for a market to be able to have. I remember as I was reading about it, that to be able to have a mature market, be able to see prices grow, you need a lot of movement even on the day-to-day. Because it is the movement in the day-to-day that injects information, provides information into the market over whether any stock or any business is doing well. And this is what gives, as you accumulate that over the course of days, months, years, and decades, it provides a
good oracle for exactly where the price needs to be. So
you need to have the barriers to entry with regards to being able to trade stock daily to be low enough for most people to be able to trade, and this way get a more robust view of the market. You have to think of it as a kind of an ecosystem where you have your large animals, your lions that hunt, but you also need a lot of the small animals just moving resources around for their own gain. There are those people who are just trying to make a killing on single day trades. Okay, no.
It's actually interesting. No. It's actually true. What you're saying is kind of correct, because by more participation, we essentially get better price discoveries and price oracles. There's a counter narrative to that. If the market is very small and illiquid, for instance, like in this case, we don't have a lot of products on NSE. Hopefully, with more interest and more participation in it, we get more companies willing to IPO because they know the participation rate is going to be higher, and so on and so forth. However, the statistics still don't lie. Even in more mature markets like the US, and like 87 to 97% of traders on Robinhood actually lose money day trading. And that is stuck, bro. It's like saying 9 out of 10 people who are day trading on the stock market are actually losing money. What does that mean? That means for the hedge funds and the high-frequency traders, and in this case, the large stockbrokers and the fund managers, they're actually using the wisdom of the crowd as the oracle for them to beat the market. Like, okay, where do I quickly mint value out of? And let me tell you a very interesting statistic. On launch day, while more than half of the daily transaction volume that was happening on the stock market was actually through Ziidi, which is amazing. It's the big statistic that everyone is marketing. 2% of the actual value was actually traded through those half, like 50%. So the Pareto principle already is at play. Is always here. At play. The Pareto principle is always at play here, and which kind of brings me to another hot take. I don't think Ziidi Trader is it is not a public utility or for wealth creation.
Interesting.
I think it's a masterstroke in Safaricom strategy to build Africa's most powerful financial walled garden. Because when you think about it, you control the rails, M-Pesa.
Control the cash flow.
Exactly. You control the on-ramp, the app and you also have an exclusive brokerage partner. So you control the brokerage as well. And finally, the user, of course. So it is effectively a closed loop where Safaricom stands to mint value at every step of the transaction. So I think it's less about actually democratizing NSE, but more like annexing a section of NSE for themselves. But anyway, participate.
What would need to change for it to be truly democratizing?
So for that, I actually had to go down kind of a rabbit hole of doing comparisons as well. So let's start. And it's actually more of a cautionary tale. I already talked about Robinhood, right?
Yeah.
And through its zero commission model that drew a lot of heavy criticism. And not just criticism, it actually drew a lot of fines as well. That payment for order flow revenue, where essentially how they were able to make it free for people was to, when somebody takes an order, places a bid or a sell on a particular stock, what they would do is that they would actually sell this to high-frequency traders, which would lead to some disparities in the price that you're getting in at and the executed price. Yeah, so it led to a lot of fines and a lot of issues. And it's been accused, and I think we can even just put samples of some of the cases. But the more interesting and perhaps I think more relevant comparison for Kenya is actually to consider India. So India, in my opinion, now witness a true retail investing dynamic and revolution. The number of securities accounts, known as demats in India, it exploded from 25 million to over 210 million by 2025. Remember, I told you there's around 112 active, 112 million. That's 8% of the population.
Yeah.
The active ones is around 20% of the population. So, the registered ones, the registered demat accounts are around 20%. Half of those are actually reasonably active. And the key difference here was for them, and you kind of hinted at it, was the ecosystem. So it wasn't one company. It was a combination of zero brokerage platforms, guys like now Zerodha that I mentioned, right? Which made trading free, putting in. And also public digital infrastructure models. For them, they have this payments interface called UPI, Unified Payment Interface. Think of it this way. If M-Pesa rails were accessible and any broker can tap into it to be able to
could offer
their brokerage to be able to sell. It prices down the fees. It makes it way more competitive. It doesn't put it under an exclusive, but it needs a combination of different things. One, regulation around how CDS accounts are handled and managed, because you see, they had to work around with the constraint of, I think, the CDS, the NSE regulations around how you can manage CDS accounts, and that's why they did the omnibus model. So that's a big one. So the ecosystem was very conducive for them to be able to actually have more players to jump in. And because of that, Zerodha actually now competes mostly on feature and on service. And I tried to put in a couple of metrics to compare them. So let's talk about a feature on one side. Let's talk about Ziidi. Let's talk about Robinhood and Zerodha. When you talk about brokerage fee, in Ziidi, we're looking at around 1.5% per direction, effectively around 3% for both directions. If you place an order and then you get settled. In Robinhood, it's 0, but it's payment for order flow. Controversial. In Zerodha, it's actually 0. And it's for equity delivery. When you look at about the structural thing, like the account type, it's an omnibus account in Kenya. It's an individual account. So in the US, at least, it's like you fully own the share itself. Yeah, not just, as you said,
not a fractional ownership by proxy.
Not a ledger in Kestrel's book about allocating a particular share to this particular microtransaction investor. And in Zerodha in India, it's an individual demat account. So with them, you have ownership, actually. In fact, that's the next metric, right? Ownership is indirect in Ziidi. In Robinhood and in Zerodha, it's actually direct beneficial ownership. In India, it's like direct legal ownership. The ecosystem is closed in Kenya, which is why my argument for Safaricom being a walled garden, in my opinion, kind of holds some weight. And then in Robinhood, it's open. They compete with other brokers openly. And in Zerodha, it's also open. There's multiple players, and it leverages publicly available protocols to build payments on, like the UPI one that I talked about. So yeah, the future of financial democratization, in my opinion, isn't just about apps. It's going to be about open protocols. I don't want to get into poly market, but you see where I'm heading.
We shall not touch that horse tonight, but rest assured,
YOLO. Coming
soon.
GM, brethren. Anyway, the real game isn't like a single super app, mini app in M-Pesa. It needs to be like a public good, like an open protocol to build, or even M-Pesa makes it open for many brokers to also participate. But imagine if any licensed broker in Kenya could plug into M-Pesa for free and compete for customers on a level playing field. There are companies doing this, and I feel like they're the ones who are gonna get the brand. And there's something I failed to mention. This is not Safaricom's first play into this. They had an investment product that they are easily phasing it out. It used to be called Mali. They've done multiple forays into trying to build. In fact, when you even go into the mini app section, you'll see Ziidi Trader, you'll see Ziidi as well. And I think there's even like an anti-competitive case, an ethics and anti-corruption, I think, case somewhere around anti-competitive
behavior.
Yeah, behavior like happening in the place. But anyway, when you look ahead, when you look and you start to think about the future, the open protocols, the only good thing that I like about Ziidi is it being a first step, but not the only step to where we need to go to when it comes to retail investment.
Let me ask, what does it then mean for local companies? Because as you open up investment into the stock exchange, ideally this is also meant to make it more enticing for local companies, startups,
to
local
IPO.
businesses to list on the stock exchange. Do you think we'll see that drive an increase in also local companies listing?
Yes.
Or should we expect to see that? Or
so I think it's going to be complicated. We can just get into in 2025, we can get into the 206, 208 IPO boom, and then we get into a whiplash when people start realizing it's actually loss-making. I would rather still be invested in my chamas, or still buy land, or still invest in real estate, which probably returns 8 to 12% every year. Because when you start doing the effective calculation of, is it really worth your investment here, it's going to be very hard to actually make bets that
make that justification.
Yeah. And so I don't know, it's complicated, man.
And I think the other way that we can look at it, and it's something we had talked about just a few minutes ago, is the fact that we have to look at the cultural way that people look at it. Is for the average Kenyan investor getting into retail investment, is this an investment opportunity with the aim of growth or with the aim of guarding and protecting your wealth? Because those two are very different, create different levels of incentives for businesses trying to join.
Correct.
This is what I mean. For a company that is very established, if you have a stock exchange that is primarily driven by risk aversion, and shying away from any losses or any risk. It means that the kind of financial play where you make a lot of profit from the jumping in stock doesn't create such a great incentive, because it's not driven by, there's less speculation. It's more about, hey, the fundamentals are right with all these businesses. I'm putting in because I want a guaranteed dividend, I want a guaranteed investment. Whereas the more robust markets, or the biggest one, in this case the US, is primarily driven by the speculation, in the sense that, hey, we don't know, yes, the Microsoft are valued at this valuation, but we believe that we can see great growth. Not just 1x or 1.5, like we want to see a 2, 3, especially when it comes to new businesses joining.
Yeah.
For the old businesses, the expectation is that they stay steady, if not grow.
Yeah.
But you see, for you to entice new businesses to want to join and to engage in this market, they need to see that, hey, for our participation, we can unlock a lot more capital.
Correct.
And this has to be driven by the speculation that, or the belief that by us joining and people buying into our stock, they must also believe that our price will shoot through the roof.
Yeah.
And for the most part, I don't see that being the cultural way that we look at stock or investing, at least locally.
I don't think it's locally. I think it's everywhere. But I think my perspective would be, because, okay, let me just say, from the company's perspective, if there is a really liquid market, it's inconsequential. You will want to participate and make your case for why you're the next hottest stock that is listed, right? So I think it's more on us leaving our listeners like with a challenge and them asking themselves like 3 fundamental questions. So the first one is, am I really investing or am I trading?
Yeah.
And investing is buying and holding for years. Trading is buying and selling for days or hours. One builds wealth and another one destroys it. So if you're getting into trade, trust me, you'll be the 8 out of 9.
Is this financial advice?
This is not financial advice. I'm just saying, this is my statistical.
Do what you want with your money.
Yeah, do what you
All
want
we
with
can
your
do
money.
is lay down the principles.
Yeah, as I said, I also IPO'd, I also shield a little bit with, into like, because I'm also interested in it. I'm always optimistic, right? But 8 out of 10 day traders, even in established markets, lose money. Yeah. So you need to really think about why you're getting into this game. Before you download that Ziidi app, before you start putting money in, are you investing?
Are you hoping to make something in the short term or in the long term?
Yes.
If you want to make in the short term, then are you willing to accept all the risks that come with it?
Correct.
But always remember that there are no solutions, only compromises.
Well put. Second question that I think somebody needs to ask themselves, do I understand the real cost and not just the advertised fee? A 3% round trip on a small fee trade means you're already by default expecting a 3% price change by the time you're getting out of that trade that you're getting. And that is not it is not a non-zero thing to consider. Because you need to now ask yourself, what is the percentage of stocks that every year at least rise by 7% consistently? And one hidden thing to kind of think about as well, especially when you're dealing with the Kenyan shilling, is you think about the cost of inflation, right? Add that to the 3% cost, which is probably like the 1.5% in and 1.5% out. So think about that real cost before you start putting in. And I think that's an important thing as well to kind of consider. And the final one basically is also the first point, but if 8 out of 10 people are losing money in developed markets with better regulations and more transparency, what makes you think that as a day trader you'll be the exception, right? Yeah.
And the other thing that we had not mentioned as well about this is that this is also an information game in the sense that if once I start, let's say I start trading, I start putting money into investment, I now start to dabble with the information. What stops me from just putting my money in other markets? There is no moat to necessarily tie me down to this. When I'm going to work every day, there's the billboard for investing in blue chip stocks, the Googles and the Microsoft. That's being advertised to me here in Kenya. And so even as long as the moment my eyes are open, there's also the perception of, there's also the idea that I'm not necessarily tied down to this local market. So we also have to make a case for why is it worth investing in this market in particular? And it cuts both ways also for businesses, in the sense that if you're getting to a point where you're talking about listing our stock on the exchange, why does it have to be this one in particular? And I know that there's a lot of regulatory framework, but you're not tied down to this one market.
To this one market.
Why not go to a market?
I mean, think about it. And I'm not even an investor per se. Me, I'm just a tech bro over here. But look at funds like Mansa X. They have a dual investment strategy. Like, they have exposure to global markets. I think the good thing about Ziidi is I feel like it's inevitably going to create like a big psychological shift.
Yes.
Especially to retail traders.
The cultural paradigm.
I have some exposure in global equities, but I never had a lot of exposure actually in local equities. So it's until Ziidi came along, and then I was like, okay, let me look into this market. I actually came and realized, like, in the region, NSE is actually performing the best compared to any other stock market in the region. I think over 5 years, it's increased 52%, which is massive indicator. So in my mind, I was just like, hey, if this is an arbitrage game, which companies do I think I can value invest in, right? Like, they're solely undervalued and really look good. I'm looking at a couple, not investment advice, Africa Equity, and a couple of other, a couple of other stocks. But it's one of those things that's made me, the fact that I have the access, it's made me excited to invest here. But now it shouldn't stop there. It shouldn't stop there. Like, when you look deeper into it, we need more variety. We need more competition. We need more people. And we need to ask the real questions, right? And that way, it's when you'll not be making the decisions for yourselves if you're investing or if you're trading. And if you are trading, crypto is also available for you. Like, you can.
This is not financial advice.
Not financial advice. But yeah, this was an interesting one. I think it was very interesting to kind of get into the hype.
Do let us know around. If you are invested. Did we get something wrong? We are just tech bros. We're not big. Actually, we do work in fintech.
Yeah, but
we are not experts in any way. Just two smooth-brained guys sharing the bits that we've learned.
Yeah.
Let us know in the comments what we got wrong.
Yeah.
If you've enjoyed this show, please hit like, subscribe. Those hitting unsubscribe, don't forget to hit confirm.
No. All 100K of you. Somebody said. Somebody said in the comments, right?
Yeah. Thank you so much for the subscriptions.
Yeah.
We said it as a joke that we're just going to ask guys to subscribe, and people did, and we cannot understand how that works. But for every single one of you, we're grateful. Thank you for all the comments. Someone said that when I made the request for 100K in Q1, that I spoke like a true VP, and I did not realize that I am truly a corporate shill up until that moment, because I realized that even at home, I speak in sales and corporate jargon. How we shall unlock value, we shall unblock
the all 99,500 of you.
Yes, but thank you so much.
Yeah,
for being part of this journey.
Thank you.
And do allowed pieces of it to the.
I genuinely thought I silenced. Moving on swiftly.
Here on the admin access, it's always the usual suspects.
We have
nothing ever changes.
Inclusion is a
history
policy.
Does not repeat. It always rhymes. And in this case, the rhyme is the word dom.
I feel like we should leave that in. Anyway, that was a good save, bro.